Hey guys, welcome back to my profile and posts. If you want to get my free training, as always, just check under this video. It will change your trading today. So I'm going to talk to you about what I like on the ord and why. And this is going to be quite a good video because there's a lot of repetition you can see. There's a lot of trading lessons you can learn. And it's mainly because in the markets, as many of you will know, I often say history repeats itself. So I'm going to tell you why I say that and what you can actually do to make that work for you, more or less. So what I'm doing now is I'm just putting eclipse symbols at all the points where roughly around the same area you've seen price fly away to the upside. And just note that within the period I'm showing you, it's gone on since March 2023. Okay. So early March 2023, and we're now at August time. So at all these points I'm just labeling now, you've seen the market pop to the upside. Okay, you've seen it happen various times. So what that needs to do for you is it needs to say, okay, well, we've seen the market pop up at all these different points in the past. So what can we infer from that? What can we learn from that? And what can we, how can we use that information to make a good judgment in the future? And that's what trading's all about. At its core, successful trading just relies simply on knowing what's happened before and how you can use that information, because all we can actually literally agree on is what we can see. It's undoubtable to say that all these different areas where the price has flown away are not long zones, or it wasn't an area where people were getting long. So you have to think to yourself, all right, well, if we're coming back there now, what do I want to do with this? Do I want to take it long? Okay. Or do I want to take it short? Now, given you've seen the price fly away to the upside all these times before, would you really want to risk shorting it? And given the price has already come down such a long way from the previous peak, would you really want to short it? It's just obvious. Okay. If you look to the upside where you had a fall, this is no coincidence. The price doesn't just fall for no reason. Okay. It doesn't just fall because your stochastic oscillator got high and reaches into the overbought area. No, it's happening because people have sold here and traders will use that information for the future. You're just being told what is a good price to buy. Okay. Just like you would if you were buying anything in any other market. Okay. If you were buying a car, everyone knows what their favorite car is worth. Okay. And if they can get a cheaper deal for it, great. That's fantastic. So the point we're getting to now is another one of those long zones. And really, my strategy relies on reading charts and understanding how you can make a positive inference for the future. Or, in other words, how you can look at those charts and make a more probable judgment. Because at the end of the day, markets are all about probability, and your risk needs to be put in line with that probability. Okay, if something's more probable, you might just trade a normal size. We're not looking to go really heavy. We're not looking to go nuts. We're just looking to use past information to make future judgments. And that's all price action is. Price action is simply using the past to understand what's likely in the future. Now, when I say likely, this could fall through lower, absolutely, but then we'll use dollar cost averaging or DCA methods to pick further long zones where we've previously seen that price rejection, because all we can do as traders, all we can do in our technical analysis is look for signs that the price might rebound at a certain level. Or, in other words, look for places where people are starting to liquidate their shorts and flip to the long side. Remember, in any market, when there's something that people keep selling and selling and selling, like you've seen on your ord, it just brings the price down because they have to ask for less. Okay. And what happens is eventually you get to a point where people stop asking for less and then they start buying. It's a bit like you see on housing markets when mortgage rates go up in a lot of places. People can't afford them. So they start to sell their houses and the price comes down. I mean, you could even imagine the odd dollar here is houses, okay, against the US dollar. It doesn't matter what the chart is. If you know what is a good price for people to buy a house, or what price people have previously liked buying a house at, then you're taking the same principle and doing the same thing, which you've seen all these other times. So fundamentally, that is how you use price action for a higher probability trading strategy and to take sufficient gains over time, like I did in my live video this morning that I posted to my Academy members. Thanks for watching, guys. As always, go under this video. Do like, comment, and get my free training. And of course, I'll see you in the next one. See you there.